Hey, happy Monday, traders. This is William, and I'm going to do my recap on all my trades today and then show you some member trades on Facebook because a lot of our members traded Facebook today because it was in play. And one of the things that I've done to help improve my trading more than anything else is to see how other people, real traders, trade the same charts that I see. What do they see? What are the indicators? How do they feel about the movement? What direction are they thinking the stock's gonna move? When I started to do that, and I could use that psychology to be like, all right, this is what other people trade. This is how it happens. This is what new traders do. This is what experienced traders do. These are the setups. I can kind of see everything in the moment then, and I know if I'm going to be going against a lot of people or with a lot of people, which is how I came up with the harmonious chart idea and all the moving averages. So let's share this. So first trade today was on Disney. And what I recently did was switch to a fixed risk per trade, meaning on every trade I have hotkeys that determine my share size. Robert H is a big proponent of that. We had a member in our chat, Kyle, that introduced us to these type of hotkeys, and I think he got it from somewhere else, right? We just all learn from each other, which is fantastic. So I went short Disney using a fixed risk per trade here. And my stop here was 50 cents away. You see that? It automatically puts a stop in the market. So when I submit my short, it puts a stop right there. And, the trade wasn't horrible. I had a gap down, which I liked on the daily. And we see the SPY here. The SPY had a teeny gap up, so it was moving independent. But still, look at this gigantic bull flag pull potentially and above the moving averages. But I waited for the dump here on the 1 minute. I waited for the pullback. And look, I got short right here, and it made a little move down with the 1 minute low, but it held. And it held a double bottom on the 2 minute, a really fast double bottom right there is what I ended up trading against, a short, which was not a good idea. These long wicks on the 2 minute and then break the 2 minute high, look, it gives it momentum. The buyers showed their face, and at that moment, look at the 5 minute chart. Look what I ended up trading against. I shorted that turned out to be a hammer. Okay, this is a hammer after a trend. That's the last thing I want to short against. And it gave me the teeny little move down, but it went back up. And I put my stop right at about the, it was around the 20 moving average on the 2 right below it. And I figured if it's going to break above VWAP and the 9 on the 2, if it breaks the 20 or hits the 20, I'm out. All right. And it broke it. It stopped me out, and then it went back down for a double bottom, but I wasn't going to touch this. Look at this gigantic volume increase right here. Buyers came in again, and then it made the move up. That's a double bottom with a hard double bottom because it does break through there, but then it holds, and then it goes. But again, here's the point. I had a 50-cent risk here. My stop was 140.24, and look, I waited all this time, and it finally got stopped at 140.26, so only 2-cent slippage on a $140 stock, so I was really happy with that. And the trade wasn't a fantastic trade. I tried to wait for the pullback under VWAP, looked like a gap down, but I traded against these wicks right here on the 2 and this 5 minute hammer that formed. I could have got out sooner after I saw that, but I tried to hold. All right, so now let's go with Facebook. Facebook was the same thing. I was trying to go with the direction. First, it's in play. Look at this gap up. Look at the daily on the SPY. Teeny gap up, big gap up. This means it's most likely going to be in play and be independent of the market. And that's what we want to do. So on this first trade, I was seeing, look at this, on the 1, it held the 50, holding the 50 right there. No moving averages on top, okay? It's completely empty. All the moving averages are below. So here's my harmonious chart, traders. This is it, okay? So right here at this moment that I bought it, look at this. I saw this A, B, C holding the moving average with no resistance up here and above VWAP. So right when it broke that, or right when it was about to break the body, I went long here and I put my stop right here. So you can see 185.68. And now I no longer have to care about how many shares I pick. I'm risking the same amount on that Disney trade, and my stop was 22 cents, which was right there. And here's the thing though, my stop was 22 cents and I lost 11 cents in slippage right there. So it's tough when you put your stops at the candle breaks. You can lose with the gap up and down because there's so many orders on that. And I know that. I'm aware of that. But I just want to make sure you guys are too. That's a 10-cent slippage on this $185 stock, which isn't the end of the world. So you can see I held, right? I got stopped out right here. Okay. And then I was like, what? Why did I do that stop? If my entry indicator was it was holding this 50, holding this 50, holding this 50, holding this 50, right? And then I had the A, B, C, D pattern that failed. All it did was did exactly what it already showed me the 4 times earlier. So I'm like, all right, that was a dumb stop placement, right? Sometimes we do dumb entries. Sometimes we risk too much. And sometimes we put our stop in a bad technical level. And that's what I did. So I re-entered right here. And then when I realized, like, okay, look how much strength this is. Look, this is a potential bull flag. Look at this 15-minute chart uptrend. Look at this 60-minute uptrend. Look at this gap up. This stock has every element of going. Okay, so then I do it. I decide to put it slightly under the 50 at this time. So when I enter in, I get in at 185.35. I enter in twice because I was so confident at this trade, and now I'm closer to the actual support. And once it hits, it goes, right? Once it hits, it goes. Once it hits, it goes. So it hit it right here, and I was thinking then it's gonna go. And I put my stop at 185, and then I quickly changed my stop to 185.02. Right? The hotkey automatically submits a stop, and I wanted to be at 185.02 versus 185. So I canceled the stop, placed it up at that so I wouldn't lose too much on slippage. So what I was risking, right? I was risking, in theory, 30 cents, basically 30 cents. We'll just do that for easy math, although it was a little more. 185.35 entry, 185.31 entry, risking 30 cents for easy math here. And then I decided to get all out in one order. And why did I do that? Because I didn't see any resistance. There was no overhead resistance, so I didn't want to partial out too early. I wanted to let my winners run. Look at this, no new 1 minute low until there. But at this point, it already broke high a day. It's just gonna bust through, go back to the breakout point, and then continue again, right? When I got in here, no new 1 2-minute low but above moving average, no new 2-minute lows. It looked just extremely bullish, so I hit a limit order right there at 186.89, and the top of that was 186.94. So I was very pleased that it was able to hit it before it made this move down and then went back up. So again, if I'm risking 30 cents and I enter in at 185.30, we're just gonna use 30 right now, and I get filled at 186.89, and I'm risking the same amount as my other ones, that's a 5-to-1 risk to reward. And yes, I did enter in twice here, but that's because I was very, very confident in it. But I don't have to. I no longer have to pick the number of shares to manage my risk properly. It's all built into the hotkeys. Now I just get to read the chart and execute the trade and not worry about risk management in that way. And it's like a weight off my shoulders. It's wonderful. All right. So now let's see a couple other traders, right? I talked about this. What do other traders do in the room? This trade was from Norm. Norm is a killer at trading the opening of the market. Look at this. He gets here. He sees the strength. It goes up. He got over $1 in that. Came back down. Look at that nice stop. And then look, he realized why stop out also. It was holding. He gets back in, and then he partials all the way up. That's a fantastic trade. He realized the same thing I realized. Why stop out in this stock? It's strong. It's holding. Okay, awesome job. And of course, we do want to stop out because we can always get back in. So that was a successful trade from Norm. Here's Eamon from our chat. He traded it 3 times. Enter, right? Long cover, long stop. Wait, this is a long profit. Get out at break even. Long again, get out at break even. Long again, and all these are different setups, right? He's got his setups right here, and look at this winner he held just like me. It's wonderful. Great job to Eamon there trading that Facebook. He was wanting a long because the chart was screaming long. Now this was Master Chief. Master Chief, I talked with him about this from our chat. He scaled in. These are all longs, but he started out really small to scale in to get better entries closer. So he's trying this out. And so don't think this is over trading, because I asked him this too. I was like, hey man, how'd you trade this? And he was like, he scaled into these trades, and then he realized the same thing. It was a long for all the reasons I described. And look, he's seeing it holding this moving average on the 5. I saw the 50 on the 1. He's seeing this on the 5. And then he scales out just like he scaled in. Beautiful trade from Master Chief. And then we've got, I think this is Doug from our chat, and he actually took it long here, holding these. I don't know where he put his stop, but he didn't get stopped out. He got 100% out. And then he told me he was so happy. It was the first time ever he went long and profit, and then went short, and then for a small profit. But even that small profit was nearly a 40-cent play for him. So that was, again, he got it both ways on that great trade. Everyone in our room did pretty good on Facebook today. And then this one. This one was a crazy trade. I forget the name, maybe Bo, the stock operator. I'm not sure, but look at all of these trades, and he made out like a bandit, okay? Long in pre-market, profit, 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 profit. Long again, profit, profit, profit. Long again, profit. Long again, profiting all the way up. And then this area he started to short in. And then I think he switched it long again. He took it long, short, probably with some break evens, and long. He was really, really killing this stock and had a good sense of it. And he had a great day. I asked him about it. He was like, how'd you turn out overall? He said he did great. So if you guys don't watch other traders and you're stuck in your own mind, you need to find other traders just to see if they look at the same chart that you looked at, what did they do and what was their outcome? And if everyone went long on Facebook and I went long on Facebook and we all made money and we were all independent, I know I was reading those charts correctly. And that's what we want, right? That's what we want to do. To understand how other people trade, how we trade, and know that if our sense of the direction and how to trade the setup and what stock we're picking is the right thing, and if everyone's doing it, then it's that self-fulfilling prophecy. Like, yes, people are seeing the gap up on Facebook. Gap up. They see strength. There's no moving average resistance, right? People are longing it. They think it's going to go, and it does. Look at that. All right. So thanks so much. If you have any comments, please ask below. I will love to answer anything. Thanks, everyone.